think you bring up the key point, Mike. It's the asset without any counterparty risk. So central banks around the world, be it China, be it South America, be it parts of Eastern Europe, it's not necessarily that they have to sell all their U.S. treasuries and buy gold, but as treasuries expire, as their bonds expire, and they rotate a little bit out of that fiat currency and continue to be that supportive bid in the gold market, amongst all the other stuff that's going on. And, even to relate it to silver, people can say, how can the gold to silver ratio blow out to 100-1? It's the fact central banks are buying gold and they're the bid in the market.
I think I can make the case that gold has been an all-star story for over 20 years, but obviously more recently over the last couple of years. I'm thrilled. It's been our number one recommendation for people on Money Talks, along with things like uranium, by the way, locking in your mortgage 4 years ago, all of those things. But we continue to watch these record movements. The volatility jumps out of me. That's why I'm so pleased to have Rob Levy with me. You should find him at bordergold.com. Rob, I mean, you're in the business, you know what it's like, but come on, this week, the volatility, I mean, I guess it's just the magnitude continues to increase.
Absolutely, Mike. It knocks you at the back of your seat a couple times when you see these kind of moves. You wake up overnight or in the morning and see the action in the gold market. Once again, we're within sort of touching distance of that all-time record high in U.S. dollars, near 3,500 US the ounce. But once again, this week up over 3,400 the US the ounce. And you have these days when you're up or down around $100. Yeah. $10 a day used to be a big move. And now you don't get something hedged in time. Look out.
That's what's blown me away. Obviously, and it's, it's normal that people attention all of a sudden gravitates, and it seems like, does it worry you? I'm just talking not as the, Border Gold, where you do a ton of business with people who want gold and can sell their gold, or other precious metals too. But does it worry you just looking as a price action? I've been sort of more cautious recently because of the sort of parabolic-like move.
Absolutely, and it's so reactive to everything that's going on in the market. And gold at times can be a thin market, so if everyone crowds into the trade, it can move, as you said, very quickly. So for someone who's a bit of a market maker, buying and selling to customers, it does present challenges for us with some of that quick volatility. And you get these periods like we're in right now where it seems to cluster a little bit and you have a lot of action. You're waiting for things to settle down a little bit. But as you said, it makes it a little exciting in the day to day.
Well, yeah, I just want to come back to the overall market, but just your personal experience this week. Are you seeing, or not just this week, over the recent time when gold's had a more obvious up move, are you getting a lot of foot traffic saying, can I buy it? Or are you getting the foot traffic saying, should I sell it?
That's what makes this market a little more interesting, is where we had a little more trends of one-sidedness over the past maybe 18 months where we were net buyers or we were net sellers. You sort of see the shift back and forth day to day. And there is new interest in this gold market, even at, 3,400 US. There's people coming into the market to buy and put on positions. So it's not necessarily one-sided, which can make it a little bit more interesting for us. Not rampant demand at these levels, but there's still enough to move some metal.
Well, as you say, as you start sniffing, 4,500 Canadian, per ounce and higher, I can see that it's a significant change. And this is where everyone kicks themselves. Even if they own gold, they say, why didn't I own more? Why didn't I sell 3 of the children and exchange them for gold? So, these are fascinating times. But what I sense a little bit differently here is the reason. We've been chronicling with Victor, central bank buying for ages, that again, I still go back to, the confiscation of assets, as the outset of the Ukraine war. I always thought that the government freezing bank accounts, of the truckers was a more significant signal. And you certainly have a lack of confidence in the system. And man, as Doomberg said last week, you're seeing a lot of Chinese, let's get out of the treasuries and let's get into something else like gold.
Yeah, and as you said, it continues to be the trend. And, I even like to say the de facto bid in this market. You look at recent data and it's the People's Bank of China continuing to amass gold holdings over the past half year with fresh data from April. And it's sort of that key figure, 1,000 metric tons a year. And I think you bring up the key point, Mike. It's the asset without any counterparty risk. So central banks around the world, be it China, be it South America, be it parts of Eastern Europe, it's not necessarily that they have to sell all their US treasuries and buy gold, but as treasuries expire, as their bonds expire, and they rotate a little bit out of that fiat currency and continue to be that supportive bid in the gold market, amongst all the other stuff that's going on. And, even to relate it to silver, people can say, how can the gold to silver ratio blow out to 100-1? It's the fact central banks are buying gold and they're the bid in the market.
Right, and they're not buying silver.
And they're not buying silver.
Silver's been a solid performer, I would call that.
Mm-hmm.
But yeah, I think that's such a key point you're making. Like, who's doing the buying? And that's also why I think, I think people should make a distinction in their own portfolios. What is my long-term stuff, and what is something I'm more willing to trade in and out of? What percentage of gold? Because I think it's two different conversations. I don't think there's anything. No rationale, nothing changed that would say as a core position you want out of it. Like governments all of a sudden didn't get more responsible. The tensions in China, US didn't get dramatically lower. So the Chinese aren't going to want to exchange gold for treasury bills, that kind of thing. So that stays. But I think on the shorter term, it's hard to look at a parabolic move and then say, I don't think it'll correct. I mean, it may not. I'm just saying it's tough to say that.
No, and I agree with you. And we have these kind of volatilities, and those are the days we see the buyers come into the market. So, for example, Thursday of this past week, and you have gold come down by $80 to $100 the ounce, and people who are watching and seeing, okay, maybe I want to dip my toe in. There's your opportunity because you get that little bit of a pullback. Mm-hmm. But the other thing, you just go back in the first quarter of this year and you look at some of the market moves we've had, our first 4 or 5 months of this year. And the fact that gold has been that sort of beacon of stability in the portfolio. And I know it's been going on for a couple of years now, but stocks and bonds are moving together. So where is your hedge other than a little bit of the safety of precious metals in your portfolio that prove that they're not correlated to the other asset classes? So, what's the worst case scenario if the gold and silver goes down? Hopefully that means other parts of your portfolio are doing well.
A great point. Now, people can find more by going to bordergold.com. Border Gold, you write a weekly kind of summary of what you're seeing out there. And what a great time to be in the gold business, Rob. And that's why also a great time to be on Money Talks. Thank you.
Oh, appreciate you having me. Thanks, Mike.